George of the jungle, strong as he can be.
Well, we finally got some news from the Fed yesterday and the markets did not like it. So what does it mean when the Fed talks about tapering? That's what we're going to discuss in the creditjungle.com today. This is George Anderson and thanks for joining. And I've tried to give a lot of thought to this on how I can give an example of what the Fed has been doing and how it's going to affect the markets when they change what they're doing. I've had previous videos where I've talked about that the Fed really doesn't have anything to do with mortgage rates when they set rates, and that is still true. The Fed can only control short-term overnight lending rates, which is the federal funds rate and the discount rate, and that's basically 16-hour loans between member banks. But what the Fed has been doing in addition to that since March of 2020 is that they have been purchasing on average $40 billion or $10 billion per week of mortgage-backed securities. So I'm going to try to just give a little bit of a simplified example here of what the Fed has been doing to kind of manipulate the market to kind of hold the rates low, and why the rates today on the news that we got yesterday, yesterday had a little bit of a reaction, and then this morning it was kind of a more determined reaction based on some comments that Chairman Powell gave after the notes were released. So anyway, so let's just go into pretend world here for a little bit, because to try to understand monetary policy from the Fed, federal fractional reserve banking, having the US dollar being the reserve currency of the world, I don't know that I can adequately explain it. I don't think I understand it perfectly either, but I have a pretty good grasp of it. But let's just say that we have a little local bank here, and what they want to do is they have basically bonds, and they're Apple bonds, and this Apple is going to represent a $100 bond. And the bank says, hey, our bank, for starting today and into the future, for an infinite amount of time, we are going to go ahead and issue $100 Apple bonds every single week, and they're going to pay you 3% per year. And so initially the community is like, well, this is great, because my goodness, I mean, if I put my money in the checking account or the savings account, I'm only going to get 1%, but these Apple bonds that the bank is selling, they're going to pay me 3%. So they're only going to sell one bond to one person at a time. So everybody comes in and says, yeah, great, here's my $100 this week and my $100 next week. And everybody's willing to come in there and buy these bonds, and the bank is obligated to pay them $3 per year as an interest payment on that bond. But the market starts softening up a little bit, because maybe the Apple bond's getting a little old or a little overripe, whatever the circumstances are. And the bank finds out that the demand for these apples, whether then they had 100 or whatever they could sell, because they had no problem selling 100, but all of a sudden they get 1 week where they can only sell 90 of them. Okay? Well, they have an extra 10 bonds. If the bank wants to sell those bonds, okay, what do they have to do? Well, they have to lower the price. So if the bank had to lower the price of the bond to say $50, and somebody goes, oh, wait a minute, I mean, I'll still get my $3 of interest, but I only got to give you $50 for the bond? Well, all of a sudden, those 10 bonds, those last 10, they get snatched up. Because what happens then? If somebody bought the bond for a lower price, okay, then that means that for that $50, they're not getting 3% interest, they're getting 6%, okay? So what happens now is that this bank has already made this commitment, and again, I'm using some imaginary terms here, okay, but I'm trying to simplify something. But the bank says, no, we're obligated, we're going to produce 100 of these Apple bonds every single week, and we're still only paying 3% on them. So what's happened now over the course of the last 18 months is that the Fed has basically gone to the bank and said, you know what, you go ahead and keep offering your Apple bonds every single week, and when you only sell 90 of the bonds, don't worry about it. The bank will come in and we will buy those remaining bonds, because we want the price of those bonds to remain high, which means that the yield coming back to the investor is only 3%. So the bank's still only obligated to pay that, because if the bank has to start paying out 3%, but they only sold the bond for $50, okay, the bank may not be able to cover themselves pretty well on that. So That's what's been happening in the market right now, is that the Fed basically telegraphed that starting November, maybe December, maybe a little bit later, we're not going to come in and buy the extra 10 apples that you have every month. We're maybe only going to buy 5 of the extra 10 apples. And if the market is still only demanding 90 apples, well, what happens then is that if there's a supply of 100 of these out there and the bank can't sell 100, okay, then what ends up happening now is that the price of those bonds starts going down, but the interest rate that the bank has to pay to issue those bonds stays the same. Well, that's what we saw in the market today. We saw a retraction in the price of about 70 basis points, which makes an equivalent there to almost 0.25% on the interest rate on that. And so we may be, depends on a lot of other economic factors, in a place where maybe the rates will start going up because the Fed has said we're not going to continue to buy all those excess apples. So anyway, this is a very imperfect example, and I don't teach economics, but this was the closest thing that I could think of to help people understand at how the Fed has been propping up the price of these apples to keep the rate down. So hopefully that makes sense. And how about them apples? This is George from thecreditjungle.com. Remember, you can push button, get mortgage professional, and I'd love to help you with any questions you have. Have a great day.